Hello everyone, welcome back to the channel. In today's video I'm going to be going through liquidity, one of the most complex topics and probably the foundation of any sort of smart money concepts trader. I'm going to be going through what liquidity is in reference to smart money, and finally I'm going to be breaking down a trade where I have actually used the liquidity concepts that I'm going to be teaching you in today's video. Of course, like every video almost that I've done on this channel, I have made a full document for this very topic. And this document, if I just show us how long it is, it's fairly long. It does have a lot of detail inside. Will be posted in the description once this video hits 500 likes. So make sure you like, you comment, and you subscribe, and make sure you turn on post notifications, because it will really help out the channel and this video, of course. So yeah, I'm not gonna really waste time. I'm gonna get straight into it by deleting everything off this chart and starting on the daily time frame. So on the daily time frame for NZD CAD, the first thing that I noticed was, of course, our trend. I noticed that in terms of our higher time frame external trend, the market looks bullish. As you can see, we are clearly forming higher highs. This being our lowest low, we can see our next lowest higher, another higher low, and then we have a little dip, but the market starts forming higher lows again, right? Therefore, we are clearly in an uptrend in our external structure for NZD CAD. For my internal structure, all I really did was I dropped to the 4-hour time frame and I just looked at trend. And as you can see very clearly, there's no need to really draw out any sort of trend line or anything. You can see that very clearly market is forming higher highs and higher lows. And then in terms of our lows, you can see we are in this clear uptrend, right? So we have a market that is bullish in terms of our internal and our external structure. When we have this sort of scenario, what we need to do is we need to work out whether or not the market is either overbought or oversold. I'll show you what I mean. If we have a market that is very slowly going upwards and then has a massive increase, right, in upside momentum, we can consider this market severely overbought. And the way you can identify a market that is overbought is usually we'll have a market that is roughly respecting this trend line. As you can see, the market is roughly respecting this trend line, and then the market goes very far away from this trend line. Here the market is severely overbought. When we have this sort of scenario, despite the market being bullish, we can sell this market because it's so overbought. It doesn't change our outlook on trend, because we still believe it's bullish. However, we can sell this market down to perhaps a more discounted area like this, and then we can buy this market again, holding that higher time frames trend of bullishness. And in this case, that's exactly what happened. As you can see, the market was roughly respecting this sort of trend line, as you can see. Then the market just completely ran away from that trend line and became severely overbought, right? Therefore, at this market price, I was happy to sell this market downwards to bring it closer to the trend line, right? So then all I started doing was I started looking for entries. And in fact, let me just replay this market to where it was. It was right at the top of that market, right? So as I noticed that market was severely overbought, I just started looking for entries. And lo and behold, if I zoomed in backwards here, I noticed a perfect area of 4-hour supply, right? So all I did was I moved that forward, and was expecting for the market to sell off from that area of 4-hour supply. However, if we look at this 4-hour supply and we look at how big it is, you can see that if we just entered at the open of that and put our stop loss at the close, you'd see we'd be looking at 50 pip stop loss. That's way too big, and we'd have to sacrifice our risk to reward too much for that to be a viable entry. So what I started looking for is I started looking for lower time frame confirmations as the market tapped into our entry, right? So all I did was I waited for this market, I let it play, and then I dropped to the 15-minute. And here is where it started to get interesting. If I continue to play this market, you'll notice that this market, right, I'm not going to say much, I'm just going to let you kind of watch it. This market is starting to give us a perfect wyckoff distribution. I'm going to let it play out till the whole distribution is finished, and then I'm going to start marking it out. I would suggest before I actually mark it out, you pause it and you try and mark it out, and then you let it play and you see if I get the same markings out as you do, right? So here we go. This was first of all my preliminary supply. This was my first area that I liked as a preliminary supply. I then called this my buyer's climax, and then of course this being the automatic rally straight after our buyer's climax. I called this something like our secondary test, accumulating liquidity at that area of buyer's climax, and then we had our UT, our upthrust, taking out all liquidity at that bias climax and secondary test. Then again, we had our UTAD, again taking liquidity above that UT. It wasn't like a perfect take of liquidity or liquidation, as you like, if you want to call it that. However, as you can see, it did just wick above that area, so I did call this the UTAD. And then again, we have that break of structure. That break of structure is what validates the actual UTAD, which then validates the whole wyckoff schematic, right? So this was our UTAD. We had that break of structure above this low, right? If I draw it out for us, we had that break of structure above this low right here, and this made the UTAD valid, right? Then all I did was I went to the 20-minute time frame and started looking for actual entries for a last point of supply. And if I show us that, perfect entry right here. If I show us, here we go. That was my entry, and this is where I entered my trade, right? This was the perfect last point of supply entry, and this was where I put my last point of supply, by the way. If I just show us, this was our last point of supply. So actually, let me draw it. Here we go. That was my last point of supply. So this was a complete wyckoff schematic. If you'd like to take a look at what the results of the actual entry were, I'm not going to play it out fully just because it did take some time. In fact, I'm going to go to the 4 hour, not even the 1 hour, because this did end up running for a while. But as you can see, the market just ended up dropping all the way, right? If you've been watching this video closely, you will actually notice that from the beginning of the video until now, I haven't really talked about liquidity much. And the reason for that is liquidity is not what I use to actually get entries. It may help me with adding confluence to my entries, right? So say for example, I'm looking to buy a market, right? Let me just draw something out really quick. I'm looking to buy a market that has just broken out of an area of support. That might add confluence, because it may mean that smart money has a lot of liquidity to buy this market, and I'm looking to enter alongside smart money, right? So when that's in that sort of trade, it may help us add confluence to an entry. However, we don't use it to get entries. What we use liquidity for is to help us get with our take profits. That's what I mainly use liquidity for. And in this case, if I just show us how I use liquidity, is right here. If you notice all the way down here, there is an amazing bit of equal lows. As you can see, it touched once, twice, 3 times, 4 times. The reason I like these equal lows so much is because it goes with our higher time frame understanding of the trend, right? And I'll go through this part a bit more slowly because this is fairly complex stuff, right? So here we go. If we zoom out, we'll remember that we believe, despite the market being in a massive uptrend in our external structure and also being an uptrend in our internal structure, we've only sold this market because it was overbought. We're not believing that this market will continue to sell off all the way, and this is the start of like a huge sell-off all the way to the downside, right? The reason the equal lows goes with our higher time frame understanding is because we understand that a lot of retail traders are going to be buying here, and also a lot of retail traders are going to be selling below here, right? And that's what happens when we have liquidity right at the at the area of support. People are going to be looking to buy, and then if it breaks below, people are going to be looking for scenarios like break and retests, and therefore are going to be looking to enter new sells in the market, right? Therefore, this helps smart money, because it means that if the market breaks below here and there's a lot of retail sell side liquidity, smart money can use that retail sell side liquidity to buy this market upwards, which goes with our trend. Remember, at this price, the market would neither be overbought nor oversold. In fact, it would be closer to being on the side of oversold. Therefore, this would be a perfect like market area for the market to start buying up from, right? So smart money can use this sell side retail liquidity to buy this market up from here, right? So what I'm doing is I'm entering right here. So if I just show us that entry, entered there, let me draw that in, entered there with our stop loss just at that above that area at that last point of supply, right? Let me zoom in for us just to make that a bit clearer, right? Our stop loss just went right at that high, right? And this was our entry. And then for our targets, we will target the equal lows, because remember, we're expecting for smart money to liquidate those equal lows and then initiate a big buy upwards all the way to the upside again, right? And we'd be looking at a risk total of 1 to 33, and that's exactly how I use liquidity in this setup right here. So in summary, the reason why this set of equal lows was useful to me is because I understood, right, through looking at this market with a retail lens, I understood that retail traders are probably going to be selling this market below the equal lows. Therefore, smart money can use that sell side liquidity when the market comes to that price to fund their own desired move in the market, which is to push the market upwards. Right? So that's why it was useful. And you'll find again and again this happen in the market. The market set a set of equal lows or equal highs, and then take out those equal highs. If, for example, if I go with the example of equal highs, right, let me just draw it out. The market set out an area of equal highs, right? Run away from those set of equal highs to then liquidate it and then sell back down, right? Because smart money can use that. If I get rid of these little two lines here, smart money can use this buy side liquidity up here to sell the market using the retail liquidity that they found above the equal highs to sell this market, and then vice versa through this example right here that I have already drawn out, right? So that's how you use liquidity. It's a fairly simple it's a fairly simple topic. However, it may be difficult to understand when you're coming straight out of the retail world, because basically you have to come to terms with everything you've learned being not making much sense logically. It may work in the markets because of course, when smart money sets this liquidity, you may buy this market down here because you've found a set of equal lows, right? This is actually another topic. Basically, the reason why sometimes it may work for retail traders is because that is smart money actually setting the liquidity. Smart money is manipulating the market in order to actually set that liquidity to instigate retail buying or selling below the market. Therefore, when smart money is setting this liquidity and you buy it here, right, and it goes upwards, you'll think that you're making money and it makes logical sense for you to make money. It doesn't make logical sense. The only reason this is happening is because you're being trapped, and that at some point smart money is going to bring it back down, and then liquidate you upwards again, right? So that's why it may work sometimes for retail traders, but I would still say stay away from it, just because a lot of the time, if you do get an entry and it does end up holding, you have to deal with massive stop losses and stuff like that. Like, say for example, I was a retail trader and I bought all the way down here, right? Where would I put my stop loss? Would I have to put it all the way here? Would I put it here? Would I put it here? It's just hard to picture stop losses and take profits when you're trading like a retail trader. So it may work, but smart money is just 10 times better, because you can get stop losses of how many pips is this? Of 10 pips, and I think that was lenient. I drew that a bit wrong. But 10 pips still is amazing, right? Risk to rewards of 1 to 33, and you actually understand the logic behind it. You understand the big players in the market, what they're actually doing, right? So that's why I suggest you use the knowledge that you've learned now, which is that above certain areas of equal highs or resistance and below certain areas of equal lows or support, there's going to be liquidity. Smart money is going to want to take that liquidity to fund their own moves in the market. I have made a full thing about this again in the document right here, so make sure you do all of that good stuff. And if you want to join the group where you actually get trades like these are just a couple of results of traders that have been doing very well. You can see the entry, the analysis, everything is perfect. If I just scroll up all the way here, this guy right here, 10% in one day, perfect, right? You can't get any better than that. Perfect entries, right? More perfect entries. It's just these people are absolutely killing it. And if you want to join, you can join, where you can benefit from the setups that I send now, and of course the content and the knowledge that's already in the group chat. Also, one last major announcement: make sure to follow me on Instagram. On Instagram, I'll post free setups a lot of the time. We're very close to 5,000 followers. Let's make sure we hit 5,000 followers. And on Instagram, I'm going to be doing a giveaway when we hit 5,000 followers. I'm not going to tell you guys what the giveaway is, so you actually go and follow. But I'm going to be doing a major giveaway. It will be worth it, so make sure you follow, because I will be doing a giveaway once we hit 5,000 followers. Another major announcement: once the YouTube channel actually hits 20k, and we are very close to that. If I just show us that, I think we're like 2k away. Let me check here. Okay, here we go. This video is recommended. We're at 18.6k followers. Once we hit 20k followers on the YouTube channel, I'm going to be giving away $1,000 to a lucky subscriber, and I'm going to be giving away free mentorship to 3 lucky subscribers. So make sure you subscribe, because you don't want to miss out on that. I am gonna also be hosting that giveaway on Instagram. I'm gonna be posting something, and then I'll just say at 3 people. So make sure you follow me on Instagram. Make sure you follow me on Instagram. Make sure you subscribe if you wanna have a chance of winning $1,000 and free access to the mentorship group, where there's content. I don't want to click any of this because this is stuff that people pay for. But there's loads and loads and loads of content. We have 1,200 people in the group chat now. So if you want to join, I think that's one of the biggest and most active smart money concept communities. You can of course do that first link in the description. That's about it. I hope you learned something. I've been MahadFX, and I'll see you guys in the next video.